Wow.
Yeah, the dark
Worse if
season
you're
is
in London.
the dark season is in full flow. Okay, let's get going. Good morning, everybody. I'd like to welcome you all to the Daily Energy Markets podcast. It is November the 12th. There we have our news bulletin for the day. Lots of interesting articles for everybody, hopefully, who's had a chance to peruse them already. Neil Atkinson, former head of the Oil Markets Division at the IEA. Good morning and welcome. Let's start with you because we saw an article this morning. Not sure if it made it to our bulletin, but the IEA, forecasting and changing its tune, at least changing the tune that it's been singing for the last few years of its long-term oil demand forecast. I mean, how should we interpret this, do you think? Is it that Donald Trump gets his way with everybody, not only the Democrats and, the rest of the world, but also now the IEA, bullish oil. What do you think has prompted this turnaround in their report, at least?
Well, good morning, everybody. And this morning, it felt to me like when I was a kid, waking up on Christmas morning to find, in this case, that the IEA World Energy Outlook has been released. I've already downloaded the 512 pages. Now, as you say, there is a major change to the way that their work is presented this year. The reinstatement of what's called the current policies scenario, called by others a business as usual scenario. And there's no doubt that the reinstatement of the current policy scenario is as a result of pressure from the United States, which is the biggest member of the IEA in terms of financial contribution and weight. So there's no doubt that there has been pressure on the IEA to reinstate it. This they have done. And of course, the consequences of reinstating a current policy scenario is a suggestion that oil still has a far bigger place and for far longer in the global energy mix than has been suggested in previous years and in previous scenarios. So, you could say that the oil outlook is far stronger than the IEA has previously put forward, and there is a major change, and it's a result very largely of pressure from the US government.
I mean, that's astonishing, isn't it? I mean, let me go to Ali with that. Ali Riyami, former Director General of Marketing at the Ministry of Energy and Minerals in Oman. Pressure on the IEA, which represents, I suppose, a lot of the consuming countries in a way. And what about OPEC? I mean, pressure on OPEC too. Trump has got his way with OPEC also so far this year, until very recently. What do you make of this? I mean, can one person or one country influence these outlooks to such an extent? And what does that mean really for producers who are responding to this now? They're probably obviously happy, but how much will they take on board? And of course, the IEA now converges closer to what OPEC's been saying, obviously, in its own forecasts.
Yeah, indeed. I mean, the one person that we're talking about is the president of the United States of America, the largest country, the strongest country, and the power that they have, it is tremendous. So it is not somebody ordinary that he's forcing and he's pushing these agendas. But the thing is that OPEC and before OPEC, I used to tell everybody that the IEA, they have their own agenda, and they are trying to push their own agenda when it comes to energy outlook, future outlooks. So this is now the obvious of that agenda, which is driven by by the strong countries, by whatever the countries they believe on energy, renewables, and so on and so on. But OPEC, they really stick to their position, and they say that we see, and this is not for now, this is not from this year or last year, and this is for the last 3 years. They've been talking about energy, requirements, energy investments, upstream investments to cater for the future, demand that they focus to be a very big demand. And this was on a different position or different direction with IEA. But now at least we came to a conclusion, let's say, that the two organizations, the strongest organizations when it comes to analysis, is that they see the future better than what it used to be 2 or 3 years or maybe a few weeks ago. But let's go again to His Excellency Sultan Al Jaber's statement on opening remarks when he did during the ADIPEC, and the guy was very clear. And this is not the first time. He did the same, or he sent the same message last year and the year before that. And this is just now to confirm that the energy transition is no longer there. Now we are talking about energy addition. So this is the new norm now. It is adding up to whatever we have when it comes to oil and gas or fossil oil or fossil energy. But now we are adding more. We want all kinds of energies, and this is what the message was there for the last few years now. So I think this is a correction that was late-waited.
Right, waiting to happen, basically. And the Russia war perhaps triggered the start of it. Energy security, energy addition. The transition isn't over, obviously, but we need to have more of the conventionals for here, at least for the foreseeable future. Vibhuti Garg, Director South Asia for the IEEFA. Vibhuti, good morning. Let's talk a bit about, obviously India being on the consumption, on the large consumer end of all of this oil demand, that will depend, as the IEA said, on bullish oil demand growth scenario. Give us your latest on India's outlook. How is it ending the year economically from a GDP point of view? And what's the outlook for its oil demand as we sort of cross over into 2026?
Thank you for having me. I think very quickly, just to respond on, on the different views that were presented. I think it's very contradictory. On one hand, we are having COP in Belém, where we are kind of pushing the agenda of climate change. And on the other hand, we have IEA releasing its World Energy Outlook, where there's much more emphasis on fossil fuels. Definitely, we don't see demand going off completely, but I think the previous years of editions of India Energy Outlook, I would call it more realistic, because it was the economics which was driving out the fossil fuels. It wasn't the climate agenda at all. While from the climate agenda perspective, there is a need for energy transition for sure, but it was purely on economics and financial basis that we were seeing those shifts happening, because we do have cleaner technologies becoming cheaper. So that's the limited point I wanted to make on that. But as far as India's oil demand is concerned, yes, we still are one of the biggest consumers, and the demand is likely to remain high. But at the same time, India is very, very focused in terms of pushing the adoption of electric vehicles. We are seeing huge success. The success, I would say, is good, but not at the rate at which we are seeing shift or the transition from oil substantially, because there's a new increasing demand as well. If you'll see the number of vehicles that are being sold, definitely we have seen for certain categories, whether it's two-wheelers or three-wheelers, it's electric vehicle sales are much more than your conventional vehicle. But for your four vehicles or even the commercial vehicle, it's still your conventional ICE vehicles which are more prevalent. So definitely there's a shift happening, but not at the pace, I would say. And in terms of India's GDP growth rate, we have about 7.8% growth rate in the quarter ending June this year. So fundamentals are really strong, and we are expecting for this financial year, it's going to be more than 6% growth rate.
And your financial year is March to March, isn't it?
That's right.
That's right. So first quarter to first quarter. Okay. Neil, we haven't had you, I believe, on the show since OPEC reversed its decision to sort of stop adding oil, at least for the first quarter of next year. Let's get your views on that. What do you think has triggered that move at this time?
Well, I think it's a very sensible decision. At the conclusion of each meeting of the OPEC ministers or the OPEC plus ministers, there's always a sentence in any release which says that they've taken this action or that action, but we continue to monitor the market and we will make future decisions depending on market circumstances. And I think that what they have done in 2025 so far with the nominal additions of barrels into the market has been very expertly judged. They've read the market very well. They've been determined not to lose more market share by just sitting on their hands. And they've decided for now that based on the current fundamentals of the market heading into the early part of 2026, which is what we're looking at now, there is perhaps no space for further additions because the market looks to be very well supplied. Demand will go into a weaker phase as we get into the early part of the year. And for now, they've decided that enough is enough. Now, that will change perhaps when they meet again. They'll look at the new numbers, they'll look at the fundamentals. Is this massive buildup in stocks, which is implied by the numbers we have for supply and demand, is that going actually to turn into reality? So far, the data suggests that there is not yet a huge buildup of reported stocks, particularly on land, that is implied by the supply-demand data. Yes, there's a lot of oil sitting on the water. We've got obviously issues with the dark fleet with relation to Russian and Iranian exports. We have the issues of whether the cargoes have been sold. Are they slowing down in terms of the speed of the ships? Is it turning into floating storage? There's a lot of complicating factors at the moment, but I think OPEC has judged the market this year pretty well. And all of the OPEC countries are players in the market. They are suppliers to the market upstream and downstream. They have a feel for what's going on in the market. And, consultants and agencies don't by their nature have that same degree of contact. So I think OPEC countries, particularly Saudi Arabia, have read the market very well indeed. They've been able to add barrels cautiously and carefully during the year, but now they've decided there is a pause. And the market, if you look at the prices, it's not as if the market has taken the decision by OPEC Plus to suspend the additions as a bearish factor. I think everybody agrees that the market is...
Or as a bullish factor, exactly.
Well, possibly bullish, but certainly not bearish.
Yeah, no, absolutely. Ali, talking about Saudi and what it's doing, it cut its prices to Asia recently. We have a bulletin saying that price cut headline today that means that Saudi oil can remain competitive. Obviously, if you cut your prices, you're more competitive. But do you think the Saudis or OPEC have any concerns going into the first quarter about their competitiveness into Asia, given the decision on volumes and also, taking into account non-OPEC supply figures that are out there as well?
Not at all. I think what we'll see in the future is the opposite. Now we see that the sanctions on some Russian producers and also Russian export sanctions are very tough, and this is going to limit the numbers of barrels from Russia to the market. Also, we see some, Iran also they are still under sanctions, and also the Irani barrels will be less and less. There is not only a threat to these two countries, but also to anybody who's going to buy the Russian or Irani barrels. So what happens is that we saw more GE barrels going to Asia than before. There are countries like India, refineries, and also Indian-owned, government-owned refineries are already now buying from either Kuwait or Saudi Arabia, the majority of it, and also other producers from GE. So this will continue, and will open up again the market share, let's put it this way, to Asia in the coming future, as long as these sanctions are strong and also are there to stay. If there is any kind of agreement between the two countries, between Ukraine and Russia, and that agreement will allow maybe Russia to export freely, then I think we will start seeing the position of Saudi Arabia or OPEC Plus going to be different. But at the moment, I think they are benefiting out of this situation, and not only the Saudi Arabians that have decrease their prices, but this is again maybe something is to do with acting proactive to allow the oil, the Saudi oil, is to go to the market in a better manner and also in a faster manner, rather than just waiting and see.
Absolutely. And I mean, if the opportunity is there because of more stringent sanctions on Russia, Vibhuti, let's get your view on that from India's point of view. I mean, Ali mentioned Indian refineries and what they're doing. Of course, India has been taking a lot of Russian crude this year. Can we assume it will not be taking the same volumes next year? And particularly because it's trying to do a deal with obviously the US on its trade. So how tightly do you think that is being tied in, given that India has other options, Saudi oil, Kuwaiti oil, etc.?
That's right. India did increase the share of imports from Russia because they were getting a premium price. The premium had gone down, and with this US sanctions, as well as this reciprocal tariff, and India also at the receiving end of an additional 25% tariff because of its trade with Russia, there has been a lot of pressure. And what we have been seeing now, at least the 5 big refiners have not signed any, there will be no imports of Russian oil for the next month. So we are seeing that shift happening because of, again, US putting a lot of pressure on India to reduce its oil trade with Russia. So definitely that shift is being observed now. Till about 2 months back, I think there was some kind of deal trying to happen, and now I think what we yesterday only Trump announced that they are reigniting the deal, and they are gonna come up with much reduced tariffs since India is responding well to those sanctions, and they are reducing its imports from Russia. So that shift is definitely being seen, which also means that our imports, given, as I was saying, while there has been faster adoption of electric vehicles, but the oil demand is still bullish as globally as well as in India. So we will see more oil being imported from Middle East or other OPEC countries as our reliance on oil is huge. Okay, more than 85% of our oil is imported. Yes.
Absolutely. Neil, I mean, are we seeing, we were mentioning sanctions now, Russia sanctions, Iran sanctions, perhaps less movement on that in terms of application. But, are we now going to, after 3 years of sanctions or more on Russia, do you think 2026 will be the defining year where we're going to actually see, we're not seeing any end in sight for the conflict, obviously, with Ukraine. That's one assumption we can maybe make. And so therefore, are we going to see these sanctions really bite into fundamentals, if you like, and give the oil price that real support that sanctions on paper should do, which they haven't already?
Well, you're right. The war settled down into a long slog, rather like the First World War. There seems to be no end in sight. And sanctions, yes, when they legally come into effect, I think in about a week's time, we will then start to see them bite on the assumption that they are applied as much as possible. They're not going to be applied totally, of course not. This is the real world. There are lots of ways that Russia can get oil out, as we've seen in the case of Iran and indeed Venezuela. However, if the sanctions are pretty widely applied, then yes, that does take potentially very large volumes off the market. And that does obviously give opportunity to other suppliers to take up that slack on the basis that they will do so, as opposed to sitting on their hands and just taking a significantly higher price. So, we'll have to wait and see. And I think we need to make a point here that one of the issues with the policies of the Trump administration with respect to sanctions is that, nobody would be surprised if next week we suddenly find that Trump has some kind of change of view towards Russia. There's a suggestion of another summit meeting, and the pressure perhaps temporarily is off. This is one of the problems of flip-flopping, not week to week, but flip-flopping from time to time of maximum pressure, and then you ease the pressure because you think there can be talks that might lead to some sort of cessation of the hostilities in Ukraine, and then you're back to maximum pressure. So let's take it at face value. The sanctions will go ahead in about a week's time. They will be pretty widely applied. That will provide opportunity for other players to come into the market. But what we need to remember here is that the other players in the market, mainly the OPEC countries, are not sitting on massive amounts these
Yeah.
days of spare capacity. It's not as if there's, 5, 6, 7 million barrels a day just sitting out there ready to find a home if the producers can export it. The market in terms of the OPEC spare capacity is significantly tighter than it was a year ago, or a little bit longer than that. So yes, if Russia's sanctions against Russia are applied stringently, there will be space for other suppliers, yes, but we should bear in mind that if they do increase their production and exports to take advantage of Russia's absence from the market, that erodes further the spare production
Yeah.
capacity, which is already pretty
Pretty
small.
tight, pretty
So
tight. I mean,
we could be in a bullish situation
yeah.
if sanctions really are rigidly applied.
Okay, well, Ali, that plays in a way well to OPEC, the main OPEC producers. No, they don't want to be under pressure about less spare capacity, but of course, it's positive for prices. So give us your view on how sort of, I suppose, critical the spare capacity equation is, let's say, going into next year. Is that going to be the focus of discussions within the group, as well as, even internally? Well, if Russia's being sidelined more, Saudi, etc., benefits, they're all still part of the same group, aren't they? So how will that impact also the internal dynamics, do you think, going forward?
No, I agree with Neil that the issue of spare capacity or extra capacity within OPEC Plus, it is limited. And the only, depends, before it was either Saudi Arabia or Russia, or maybe sometimes UAE in certain extents. Rather than that, it was just, numbers here and there. But being, Russia is almost out of the picture now with the sanctions and with their own internal, infrastructure problem. Because let's not forget that these attacks from Ukraine by the drones to Russia, it made a huge impact in the infrastructure. So then it's not only on the production side, but also on the export side, on all in all trains, either being crude oil or products. So it's already been affected. So the only country that the OPEC Plus can depend if there is any extra capacity, it is Saudi Arabia and to a certain extent UAE, maybe Iraq if they are really doing good when it comes to control their internal issues. So the rest of the countries, basically, either they have reached to the maximum or they have their own internal technical issues and that they couldn't been resolved earlier. And we see from the reports that issued by OPEC on a monthly basis on the production side, that there are countries that they were supposed to increase their production according to the agreement. And I'm talking about those 8 countries. And some of them, they're still struggling to add up the production. So I think it will be an issue if we are going to if the demand will grow or there will be any constraints when it comes to supply of crude. But I don't think that will happen soon, because let's not forget, and Neil pointed out that we have I don't know how many 800, maybe 1 trillion barrels of oil floating in the ships at the moment. Yeah. This can be the first one to go, and they are very close to the consumers, either India or China, and they're very close. So I'm not worried about the capacity at the moment.
For the
it will take some
future.
Immediate future. Yes, indeed.
Yeah.
But I think in the after 1 year or 2 from now, if we are not going to go and invest heavily, and countries like UAE and Saudi Arabia, they've already started investing. Iraq is investing a lot. So I think this production will come after 2 or 3 years from now. So we don't have a problem in the future, but the problem is a short term within the 2 or 3 years, if it happens.
If it happens. Yeah. Of course, there are some certain elements geopolitically that could trigger sudden spikes, but so Absolutely. Far, no. I mean, the other question is always, it's about global macroeconomic growth, isn't it? I'll come back to you, Neil, and talk to you about Europe on that front. But Vibhuti, back to India, you told us about, the second quarter GDP for India, and everything's looking, as predicted this year. But what about how much, Vibhuti, for example, are, Federal Reserve interest rate cuts in the US impacting the fiscal situation in India? Does it matter? And again, just coming back to, I didn't really get enough from you on the update from you on where you think India's going with its trade negotiations with the US. You know, the prime minister was standing strong a few months ago, defiantly. Where are we at, do you think, as we go into next year? And can India find a bit of stability there?
I think a lot of discussions have been happening since the imposition of high tariff. And as I said, yesterday only, Donald Trump has kind of announced that there will be further trade deals happening with India, and India would start loving US back again. Which means there'll be a lot of softening of the high tariffs that were imposed to India, because India is also responding well to the demands of US by reducing its.
But how much, I mean, how much of the tariffs so far impacted sort of the economy on the ground in terms of manufacturing and
They
cost?
For the very first time, I think the trade has gone down this month, which did impacted a lot of manufacturing as well, because there was more products which were still lying with the Indian manufacturers, which were meant for exports. But then because of high tariffs, there was less demand for such products. While at the same time, India was looking at diversification of trade partners. Recently, we have had some good free trade agreements like signed with UK, but before that, we also had, and there are discussions happening with New Zealand. So definitely there is much more happening from India to look at, more trading partners. But at the same time, US will continue to remain one of our big trading partners, not only for goods, but also for services as well. And you can't really kind of, when the whole world or the globe is interconnected, and there has been a huge demand for the kind of products that were manufactured here in US and vice versa as well, because for the goods, at least there's US is in trade deficit with India. India has been exporting more than what India has been importing. On the services, it was more or less the same, but yes, there is an impact. And we are seeing a lot of unsold goods lying, which will, so far it hasn't impacted, but if this phenomena continues in the long run, and if they are not able to find new buyers, then it will start hitting us. We already have seen weakening of rupee. And also on the stock market, when these announcements were made and the impacts we started seeing, there was impact on the stock market. There was erosion of wealth for some big players. We did see those impacts. Hopefully those are in short term, and with this reversal of tariffs again, we will see more, better or stable growth going forward.
What a headache Donald Trump is creating. I mean, we will see. I mean, at the end of the day, the US there's this interdependence, can't be cancelled overnight, but it's just dragging, isn't it? And he certainly seems to be getting the upper hand in those tactics. There's one hand single-handedly bent the curve up on the outlook for oil demand beyond 2050. Or that's referring to the IEA report, or did the IEA just get their peak oil forecast wrong all this time? Yes, he has changed the oil demand outlook, or not. I mean, obviously the fundamentals are what are going to matter at the end. This is all about forecasting. He might be pressuring the IEA to say this, but we've got to see these economies performing, don't we, for that demand to actually come in. I mean, Neil, let's go to you to close on that for us. You're sitting in Europe. What is the economic mood at the end of 2025, and what does that mean for oil demand?
Well, pretty miserable, I think, is the only way to describe it. If you go around, the UK, my beloved home country, is in an economic mess. France, where I'm living, is arguably in an even bigger economic mess, and it has, of course, political instability on top of that. And most of the other major European countries have economic difficulties of some kind or other. Now, Europe, of course, what does it mean for demand outlook? Well, Europe has been a mature and relatively stagnant market for quite a long time now. So it doesn't really affect things that much. The problem for Europe, of course, is specifically related to sanctions against Russia and imports of Russian pipeline gas, and indeed some LNG imports. And that is a particular problem which arose from the invasion in 2022, and Europe has been working very hard since then to seek to diversify its sources of gas supply, and it's done a lot of work on that. Hopefully this
US LNG primarily, right?
well,
I mean,
yeah,
that's
sure. But
huge.
this year we're hoping that we'll have a milder winter season overall, which is always a huge factor in how Europe copes with the energy security situation vis-a-vis gas. So Europe is not, in my humble opinion, not in a happy place.
Okay, well, there's the survey result. I was just about to call that one up. I mean, that's just a few responses so far. We'll see where that goes today. IEA always wrong on peak oil. And we didn't even mention Donald Trump single-handedly also managing the BBC and those shenanigans. So, I mean, I suppose, the headlines continue. But thank you to Neil and to Vibhuti and to Ali this morning for joining us. And I believe we also have an interview coming up at 12 p.m. Dubai time today with Jose Parejo, the consultant and strategist based in Madrid, on some really interesting comments actually from him on how energy has now become, an official form of statecraft, and is no longer just one element of many economic sort of handles. So let's see what his opinion is on that. But thanks everyone for joining us. Have a great remainder of the week. All the best.
Thank you.
Thank you very much. Thank you. Bye-bye.
Thank you. Bye-bye.